Hey, good afternoon. I know on Tuesday I showed you I was wearing short sleeves and was thinking spring here in Wisconsin. I got to admit that was the wrong thing to do. We've got winter storm warnings here today and forecast to get 6 to 10 inches of snow. So there's February for you in Wisconsin. But hey, you didn't tune in here to hear about the weather. I said I was going to cover some more insurance products. So this is we're going to get rolling here. We think that you've got to really take a look at a SCO crop addition to your crop insurance. It's supplemental coverage option is what it's called. And I have in front of you here right now what's on the RMA website. You can internet search for it. I got to tell you, for me personally, I'd rather watch paint dry than look at government websites. I mean, I think it's boring. So let's get to the next slide in here and just tell you what it is. SCO, I think the first thing you got to do is you got to think of a GRIP policy on insurance. This is a county revenue-based policy. That's what your indemnity is based off of, not off your own farm. I think it's really important to know that the subsidy is 65% in SCO. That's what the federal government's going to pay. Now, when you look at SCO, what your coverage is it starts at 86% and then it works down to where you've got your revenue protection in place. So if you buy revenue protection insurance at 70% and go with SCO, that covers you from 86 down to 70%. If you bought 80% revenue protection, that SCO would only go from 86 down to 80%. That's how SCO insurance works. Now, we think there's one simple thing to look at in here on whether this is going to apply more to your operation or not. Take a look at your own APH compared to what the SCO expected county yield is. If your own APH, let's say, is 220 bushels an acre and your county average is 180, going to this SCO is not nearly as attractive, okay, if it was the opposite way. Okay, so if our APH is much higher than the county, we might be looking at more revenue protection policy at 80%, okay, compared to one at 70%. On the other hand, let's say your APH is below this SCO expected county yield, then buying this SCO is much more attractive. On that same example, you've got an APH of 170 compared to a county yield of 180. This SCO needs to really be considered. After just saying that, it reminds me of a producer a number of years ago. He told me, he goes, well, my APH is much below my county and it's all my ancestors' fault. And I'm like, well, how is this your ancestors' fault? And I was a bit confused. And he said, well, he goes, they like to hunt and fish too much. And so when they settled, there's awesome hunting and fishing in the southern part of the county. They forgot to go a little further north to where all the good crop ground was. Man, I didn't have an answer to that. That was a good point. Well, anyway, here I got a little off subject, but now let's get over to ECO. ECO is called Enhanced Coverage Option. Again, go to the RMA website if you want to look at it, but here's what it really does for you. Again, you need to think of GRIP insurance, but on the SCO, it was at 86% down to what you're covering on your revenue protection. This ECO, you either pick up coverage at 90% or 95%, and then it goes down to 86%. At this 95% coverage, you're covering your gap from 95 down to 86%. Below, you've got the subsidy rates there as well. Again, you can find it on the website, but just want to make those quick points to you. So now we want to sit here and we want to wrap this thing up for you. And what level of revenue protection are you going to take a look at? Are you going to be at 85% revenue protection? Or are you going to be down at 70% and look at SCO? Again, there's a number of factors that we need to take a look at. Now, the other thing, when we look at these add-on policies compared to revenue protection, and that's what we consider both SCO and ECO, we really think you need to consider where we're at in a historical price range. These add-on products are much more attractive, let's say at $6 corn, than if we were at $4 corn. Now, the other thing to consider is when you look at ECO, essentially you're protecting a price range on it. You need to compare it to options. When historically, when we're at a higher end of our price range, ECO is much more attractive than options, especially in a time like now when you have increased volatility. The other thing you have to keep in mind, and we're going to hit on this here this next week, is you got to market your crop as well. Again, we want to give you some quick, webinars in here on how crop insurance works, some programs we're thinking of. Okay, and again, you have any questions, direct them to us. Either give us a call or drop us an email. Have a great day.